Also, I had some questions about the horizontal lines. We can of course practice those a little bit again. But first of all, like usually, let's do our top-down approach. Let's check if we have new setups in making. And yesterday we prepared for some, but nothing really happened. So let's check the euro-US dollar. As we said, between support and resistance, and usually I don't like it. So if anybody wants to trade this, of course, on a lower time frame, like for instance the 4-hourly chart, the price is bouncing or bounced already, and it looks like we have a break here. This is not what we call a textbook 1 2 3 setup, right? All the spikes in price trying to move lower. There's not a clean, it's a clean break, yes, but it's not a smooth retracement. Sorry for me talking like this. It's still a little bit difficult with my cold, but I try my best. So here, this is the 2 to 3 line break happening right now. So if anybody likes the longs on the euro-US dollar, remember daily resistance is up here. That's about 120 pips away. Support still down here, and we don't have much volatility. If we have some news release soon, maybe on UK, on the UK calendar, in about 2 hours or so, 2.5 hours, I would not touch this yet. Only if we might see a new 1 2 3 in the 5 minutes. So you had one chance earlier trading this on a 5-minute chart. You also have support, and you see this is the trend line, of course, coming from the higher time frame. If I zoom a little bit out, you can draw the line again also on the 5-minute chart, and would look like this. But in both cases, the price moves over the 633, and the trend line here comes back. And the good thing about this 5-minute setup is that we have a spike. Okay, price is actually trying to find the support from down here, and then moves up, and it gives you immediately a green candle. And in this case, of course, the price already bounced on the 633, and the entry is okay here if you want to do that, or depending on how fast it moved up, with a stop of about 7, I would say minimum, of course, or usually 10 pips plus spread, and that gives you maybe the first lot, but that's it. And another confirmation would be, of course, if the price would create another 5-minute setup over here and clear out this whole area. Okay. On the 4-hourly, as I said, I just don't like the fact that we have all these spikes and green candles and red candles all over the place, and it's not giving us a clean line that we could draw. Yeah, you could do it like this, you could do it like that. I mean, in all cases it broke the line, but it just does not look that great as a setup on the 4-hourly chart, having also all this resistance in place. USD CHF, as we say yesterday, we look for this retracement, this 1 2 3. It's in making. Weekly chart still pointing down, so that will be interesting to see. You see, you don't have a clean trend on the daily chart. It's breaking 36, it's trying to move higher, it's going down again, going up, bouncing, going down. So the trend is not that smooth either here on this pair. So we need these 1 2 3s on the higher time frame for sure to make decisions after the 2 to 3 line break, right? So just watch. Cable, we said that since yesterday the same. We had a 4 hourly 1 to 3 with about 100 pips stop. Everything is pointing up still, so only longs, and on the lower time frames nothing. You can see somebody's waiting for something. It looks long, yeah, right now. So we'll see if there are some news that are in favor of the cable, of the pound, that it will probably move up. Well, I just don't like the whole situation on most time frames. It's just because most pairs, all these classic major pairs, are ranging in a trend, right? We have a trend, but it's not going anywhere right now. It's trying to relax, take a breather, and then probably break down or continue the trend. So watching sometimes is better than just quickly look for trade. Here's the yen. The thing here is we had already a trend line break, 3 touches, and we expected these retracements. So here is our 1, 2, 3 in making, what we discussed yesterday. Hopefully it stays below this line, and if we can get a bounce, then for sure I would recommend you look for shorts, trade against the main trend, but you have room, right? 2, 3, 400 pips depending on how far the retracement wants to go. At least 200 to 300 pips should be in for us. Now the only time we would say okay, that's not a short, is now if that goes up here, creates a 1, 2, 3 over there and stucks there, then on the 4 hourly chart we don't touch anything here. We need to wait for the daily 2 to 3 line break, and then we can discuss it after we get this new red candle there. And Australian dollar, US dollar, the same. Yesterday we said we wait for 36 CMA bounce and the 2 to 3 line break and the great red candle like this. Didn't happen. We got a tiny red candle. It didn't break the 2 to 3 line, and price is still up. So still, like here on the daily, we watch and wait. Maybe this wants to retrace to the 36, then we have a big 1, 2, 3 on the daily chart, and then we can start connecting our lines again, see what happens in this area here. USD CAD is still long. All traders should be happy here. Look at this. This might happen at some point or here, but for now it still looks very, very powerful, and everything's just pointing up. Almost 500 points. Look at this weekly chart, right? The candles are still getting bigger. That really looks like it wants to go and hit 633, this area here, previous support and resistance. 1.13 to 1.14. bounces on the 4-hourly chart still. Only thing you get is a bounce there. That's it. Yeah. Still the same thing. It's the Euro GBP. It is a daily short signal, but the fact that the candle retraced back and that was not that volatile anyway, I don't like it anymore. Okay, that much. It doesn't mean that it cannot go. It's just me. I don't like how the candle looks here. And I decided to go for GBP JPY. We'll discuss this afterwards. Yeah, look at that. We got 1, 2, 3s and another crossover after the bounce and another here. At least here was a little bit volatile, and now it's stuck here a little bit. It's just not going anywhere right now. But there is a daily 1, 2, 3. See what the 4-hourly chart says. Not much. So it's kind of dead. Okay, Euro CHF. Again, we have our range there, and as we said yesterday, if it's bouncing, we can try, but you see, it's somewhere in between our support and resistance, so even that is probably not the best thing to look at right now. It's retracing up, so if it gets a 1, 2, 3 higher low, maybe on the 1-hourly chart, you find an entry to go along and reach resistance. Okay, other than that, we got already one here. It slowly starts moving up. Almost 8 pips in 10 hours. But it looks still volatile. Like it might get volatile soon. Euro yen, same scenario. We waited for the 4-hourly 1, 2, 3, didn't happen. It's still going up. We have resistance there. It's sitting between support and resistance now. So we need to see a clean break up, and that would continue the main trend. Ideally a bounce and a move lower, and we can look for shorts, but not before we see a clean break here. It can still do that, right? We had the crossover up here. It's a 1, 2, 3. If the price stops here, it might do this, and then break. So we'll see. If not, if yes, of course we go short. If it's a nice candle. If not, if it's breaking up, of course not, because remember the main trend is still very, very long. Now GBP/JPY, if you look at it, the daily chart, on the daily chart, the price is over the 36 EMA again, something like here down here. We had some lower points, but now it's moving up. On the weekly, bounce on the 12th yesterday. We didn't get our short yesterday here as expected. Didn't happen, and now it's over the 36 and still going. So if you look at this chart, it still looks a little bit like nothing. Difficult to decide what actually is going on. On the 1-hourly, it looks a little bit long already. So what I did, I checked the Renko bars for the guys that also like the Renko bars, and here you'll see what did I do? I just switched to this. It is an M16 chart, right? A swing trading chart, and as you can see here, for instance, I also put a position here on this account to demonstrate the rank, how it looks on Renko bars. On this chart, and you'll see you have your crossovers, so 1 2 3s, 1 2 3s, and now another late 1 2 3, but the price is sitting over the 200, and it gave a clear signal here or here later on. Okay, of course we have resistance close by and everything, but as a setup it looked much better compared to the classic chart, right? Main trend is up, price went over resistance again, so it was worth trying. We have also the 3 touches and everything, but it's not for now anyway. I'm just wanted to show you this. Let's see, might get lucky and price moves higher, but if we have some news today against the pound, it could also crash, and then we have our short scenarios still in place, even if it's a little bit crossing. You know, if it has time to turn around again, makes a big candle or red candle here, we could still consider shorts if it looks good. For now everything is long. Okay, UVCHF still the same daily 1 2 3s, and it looks a little bit funny. It's trending but also ranging, right? Price created a higher point, then came back where it started actually, and now it's up here, previous highs. I will wait to see clear direction, like that the price actually also create a higher low. On the Euro Australian dollar, expected this 1 2 3, didn't come. It's still an uptrend, of course, so might get a bigger retracement, or maybe later on a nice break and we can try longs. As I said, gold we don't touch, and GBP Canadian dollar hit the highs. Yesterday we discussed it when it was somewhere there, but somewhere here we said it might hit these highs, but it also has to break those. And now it's important that we watch closely, because what we want really is the price breaking this, and if not breaking the support, then we want to look for shorts. Otherwise it's just very, very long still. And many of you have positions here, swing positions, so I guess you would like to see a break that would reach the 2000 pips area soon for some traders using GBP CAD. And CHF yen, as we said yesterday, stuck there. Don't have to look at it right now. The Dow did bounce. Remember yesterday we said this channel here is acting also as support. This whole area here is acting as support, and it looks like it wants to retrace a little bit, but if we don't get a clean setup here, sorry, or below, then it's not worth looking at all. I wouldn't just trade it as a bounce, even if it's closing green. It's just an area of trouble here. Too much resistance, support. Let the price create setups first, at least on the 4-hourly chart, okay? Because here it's still just creating this short 1 2 3. Okay, now that we know what we are looking at, let us practice a little bit the lines. As I said, we choose some pairs here. Let me first go for this trending pair. Start on the weekly chart. It's Australian dollar, US dollar. And it looks like this. Some people just draw too many horizontal lines, and that will confuse you. If you find support and resistance all over the place, it's not good. So you take your horizontal line, you just look at the chart generally and say, okay, is there a place where I could connect a horizontal line, where I could connect more than 3 touches that are pointing out, or at least 2 touches somewhere, and makes the chart look still clean and good. If you look up here, first of all, start from the left side and look at the highest point. So you have touches here, you have them here. This is higher than that, but all in all, ignore the spikes and look if you have more than 2 touches in this area. 1, 2, you could just connect the line like this, right? You had 2 touches here. If you look further to the right, you will say, okay, look, I have touches in this area also. If I leave it here, do have more touches in this area, and I just ignore all the bigger spikes? Could you do that? 2 touches here, here, and also here. Why not, right? You could also say, look, lower here, I have more touches. I have here and here and here. And if I go lower, I have more touches there and there and there. So we have different areas of resistance. The price never usually does not just stop at one level all the time, okay? But what is pointing out actually? Of course, the highest points up here are pointing out. You could leave a line like this and say, look, I have 1, 2, 3, 4 touches. It's spiking a little bit, but these are the highest points. And they are important when the price comes back. Let's say it ignores everything else, has broken everything else, comes back to here, then drawing a line in this area between up here and here. Of course it will be important. But right now, you just forget the highest points and just connect those with most touches in an area. And I would say because of all these touches here, 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 and here, you just leave the line somewhere there. Because you have touches there, some are breaking but coming back, touches here, 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 and here. So you have a lot of history in this area. And that means not by the pip at 1.0764 you have resistance. It means that between here and somewhere over the spikes, this whole area is an area of resistance, and this is about 150 points on the weekly chart. And except of instead of drawing like 3, 4 lines, you just leave one at the area where you have the most touches, and then you know that this whole area is resistance. Is it okay so far? If you want to connect those lines, in order not to forget, you can draw a line like this with these 2 touches as a reminder. Okay? The next horizontal line would be where you have more touches. So, if you look at it, what is pointing out? All those, and later on an area here, there, there, and there. So taking another line and say, okay, look, I have touches here. I even have touches down here where it's support. So between the highs and the lows, I leave it in the middle, somewhere here. Touches here, and a lot of touches there. So another one, resistance. Okay, now, for now, it's not important that you have lines up here, but we're just practicing. The price is down here, right? So it doesn't matter here if you have lines there or not, but we just practice. So what about the next lines? We have a range, and what is pointing out actually? Support now is pointing out here and there, and in between is one candle with a big spike and trouble there. So if I check and say, okay, 1, 2, 3 touches pointing out, a spike in this area also, some candles that almost touch this area, so between down here and up here you have resistance, support, sorry, you leave it there. This would be support here. Of course the price is below now, it would act as resistance. Then you have already 3 horizontal lines, and you have a buffer between here 400 pips between those two, and another 300 between those. That's enough. Now down here, what else is pointing out? This and all those, right? So what could you do? It's closer to price. To touch here, there, and here, ignore the spike, and there, and it's all there. So between up here at the highest point in the bodies, and down here we have a lot of support and resistance. So we leave it in the middle. And if you find yourself a round number, even better. What it would be the middle? 97. Okay, great. 0.97. Now down here, now that we're getting closer to price, where else do we have resistance now? If I check all those touches, and here some, in here, if I just take the line and leave it in this area, also previously price trying to bounce there, then go back, maybe I find something and pass that will confirm this. And what I have in this area, I have a lot of touches still there, but that's close. Look at this, all these touches. I'll go back. It would end up at the highest points here, okay, and also have the 36 EMA here. If we go back, and look, okay, I have touches also a little bit lower, so actually between here and here. If I leave it in the middle, is just somewhere around number 92, for instance. Go back, okay, all these touches here, another touch. Fair enough. Okay, of course you can also go down now and say, look, I have also a million touches down here. Yes, I do. And 1, 2, 3, 4, and trouble here in this area. If I'll go back, there would be also close to all these supports here and there. Of course it's getting a little bit lower as well, but as I said, we need the most touches closer to the price, and that's about it. Yeah, we don't draw more lines. Again, the 400 pips, 400 pips, that's more than enough, having all these areas here connected. Everybody agrees with that so far? Yeah, to have it live, it's always best not to have all these lines, of course, just have one below price and one above price, and that's it, that's correct. But here we are practicing, so you can delete all of them, no problem. And also draw your trend line close to the 36. And for support, let me zoom out. You would of course look for touches below the price, and I found a lot. You see 633 is by nature support anyway, but as far as the touches go, we have them here and here, and that is enough. The 81 area, 81 to 82, is enough for the next support, and resistance a little bit here, as you know, but because we always expect a bigger retracement, I find one closer to the 36. That would be the one that has the most touches up here, between here and here. Okay. That would be resistance and support. Of course, support you also have here, and a little bit higher there, and a little bit lower down here. So that's why you leave it in between. And that's it. So is everybody okay with the lines? Or still trouble? You should really practice a little bit if that gives you a headache still. It's not that tragic. You just need to figure out where the most touches are. Leave it somewhere in this area, and then you're still doing your top-down approach. You look for your 1, 2, 3s, higher highs, higher lows, and all these things that are much more important than just the horizontal line somewhere. Okay, great.